Alright, here's an interesting chart because it ties together two different types of markets. In other words, a trending market which eventually turns into a sideways market. Now remember this, a very important point. Sideways markets are born from trending markets, and trending markets are born from sideways markets. So if you look here on the left side of the chart, the market was in an uptrend right up in here. Now what we had, according to what we teach, right at this level, right in here, we had the context of the market, which was up, and a setup, which was right in here. The market pulled back. It gave you an entry right in here, and you also had a confirming bar, confirming that the market should, in fact, move higher, and it did move higher. According to what we teach, all profit objectives were easily hit to the upside, and then the market came down. So remember, we teach you how to deal with these types of markets, because in reality, there's a lot of profitable opportunities in these types of markets if you know how to navigate them the right way. And again, this is all covered extensively in the market flow analysis method portion of the Forex Profits Mentoring Program. Now we know that many Forex traders out there try to avoid these types of markets because they typically give back the money they make in trending markets. However, when you become a Forex student of trading concepts, you will be able to spot these types of trading opportunities, and it will make your trading life a whole lot easier. Because in reality, you'll be able to make money if the market is going up, if the market is going down, or even if the market is going sideways. Okay, these last three charts had no indicators on them whatsoever. Now we're going to look at the same charts with a few additional tools on them, tools which we teach in the Forex Profits Mentoring Program. We want to caution you again, though, like we said earlier about indicators. You don't want to get wrapped up with simply looking at indicators for setups and entries. We can't stress this enough. This is where other programs fail. They simply teach the reading of indicators or a set of indicators. In our method, we don't teach you how to read indicators on an absolute level, rather the relationship or relative values of the indicators in conjunction with price action and other factors that give us confirmation of setups and entries. Believe us, too many traders are fixated on indicators and their exact parameters, believing that certain parameters are the answer to successful trading. Any successful trader will tell you that this is not the case. Too many traders have failed to become consistent because they had simply learned indicator signals. Maybe you've already experienced this for yourself. If you have, then you know. With that in mind, when you take a look at these charts, we would strongly advise you not to get hung up on the exact settings and the exact indicators. The indicators on these charts are only a tiny part of the total trading program. Now with that cleared up, let's talk about a few specific trade entries using some of the tools that we teach in this program. Now don't be fooled by the apparent simplicity of this chart. It's easy to see all the places that you think you could have made money, went long, and made money fast. But let's be realistic here. Look at this indicator on the bottom for a moment. We can guarantee that 9 out of 10 traders would be looking to go short. But according to what Trading Concepts teaches, you'd be doing nothing at all, but looking to go long. There's no way that we'd be looking to go short in here. So let's take a look at the left of this chart. We've determined the context, the setup of the market to occur up in here. Once the market put in this high, we were doing nothing but looking to go long. We'd be looking to go long right in this area, right in here. All profit objectives were easily hit to the upside. Now, if you'd have used your trailing stop method, you'd have had a nice run in this currency pair if you had decided to use a portion of your position and left it on utilizing the trailing stops that we teach. Another reentry would have been right in this area, and another reentry would have been right in this area. But again, from this first entry right in here, if you decided to use your trailing stop methodology, you'd have caught this entire move. Once again, what Trading Concepts teaches in this program will specifically teach you and show you when and where not to use an indicator. You don't want to be fighting a trend. You'll also learn aggressive entries as well. And by utilizing the aggressive entry, you'd have been going long right in here. Another aggressive entry would have been having you go long right in here. The most important point you need to understand is that most traders try to sell a strong trending up market, and that is not where you want to be, as you're not going to make money doing that. Remember, since 1994, Trading Concepts has talked to tens of thousands of traders, and at least 90% of those traders try to pick the tops and or try to pick the bottoms. Once you learn what is taught in the Forex Profits Mentoring Program, you'll look to do nothing but go long in a strong trending currency pair and to go short in a downtrending currency pair. Okay, let's take a look at this chart. Now this is just the opposite of the last chart, and we're in a downtrend. Right here, we determine the context of the market to be down. When the market rallies up off this low, we're looking to go short right in here. Then the market comes down and hits all the profit objectives to the downside. Market puts in a new low right in here. Context of the market continues to be bearish, still weak. We'd want to be selling it again. Now if you're flat the market and you took some profits on the way down and you're looking to re-enter, you'd re-enter right in this area. Market comes down, makes another new low right in here. Context of the market is still down, still bearish, still weak. We're looking to go short again. All the profit objectives are easily hit to the downside. And in fact, our first entry, if you'd implemented your trailing stop methodology, you'd have been short until right in this area. Now back to the indicator. Again, 9 out of 10 traders would have been looking to go long. They'd have been looking to go long right in this area, right here. They'd also be looking to go long right here. Again, the trend is down and you want to stay short. Now in hindsight, this looks easy. But again, if you don't have a defined method, a defined plan to go short, you're going to be shooting from the hip and you're not going to be making money. What we teach in our program will give you exact steps to know exactly when and where to short the market in a downtrending market and exactly when and where to go long in an uptrending market. And once you learn that, you'll know exactly when not to use an indicator to try and pick tops and bottoms. If you looked at this chart, you'd be looking to pick bottoms all day if you didn't know what you were doing. With the Forex Profits Mentoring Program, you're going to know with the MFAM, the Market Flow Analysis Method, exactly when and where a trend changes from up to down and when it changes from down to up. Exactly when and where to enter the currency pair and exactly when and where to take profits. Now let's look at this chart. You saw this chart a few minutes ago, but without indicators. Now we have some of the tools that are taught in this program. As we said earlier, sideways markets are born from trending markets, and trending markets are born from sideways markets. In hindsight, you can see this market turned into a trading range. But if you look to the left side of your screen, the trend was up before we entered the trading range. Right in here, context of the market was up. We determined that the trend was up and that our entry into the market was right in here. All the profit objectives were hit to the upside, and you had a re-entry into the market right in this area. You had a confirming bar here to actually go long the market. Now, a majority of traders would have been all over this currency pair. They would have been short, they would have been long, and they would have been whipped. If you were fortunate enough to make money in a trending market, most traders would have given that money back. Now, the way Trading Concepts uses this indicator down here, absolutely the price action. These areas right in here would have had us going long this currency pair. And another important point to remember, even though you're looking at a few of the tools that are taught, the number one thing that needs to be emphasized and the number one thing taught in the Forex Profits Mentoring Program is price action, pure price, without any indicators or tools. That's number one. You're taught to read price like a newspaper. That's everything. Every indicator, moving average, band, anything is derived from price. And you're specifically taught what you're looking for to enter any currency pair without any indicators or averages or any tools taught here.